let's invite our fundamental expert, Mayuresh Joshi, the head of equity research at William O'Neill. Mayuresh, thank you very much indeed for joining us. Well, since you have your global team to support you, tell us what's the interpretation. I mean, US yields at 4.6%, rupee today went down all the way to 85.7 and then bounced back smartly. Does it look like this global US exceptionalism is over? Are they telling you that India is on the verge of becoming attractive?
Afternoon, Lata. I think that seems to be the case from our desk as far as the US markets are concerned. And when we speak to a lot of institutional investors across the globe, outside the US, India probably seems to be one favorite spot as far as global investors are concerned. The other markets outside India that they probably like are Vietnam and Indonesia at this juncture. They're relatively smaller market in terms of market capitalization, and therefore, outside the US, yes, India probably becomes one good bet that investors are probably looking at on decades.
Well, Mayuresh, I'm going to toss one sector after another at you. First up, today, you know, the shipyard companies are doing very well. Garden Reach is doing well, and Cochin Shipyard, there's in fact news in Cochin Shipyard. Are these companies that excite you at all? What in the infra space excites you?
So shipbuilders might continue doing well, Tata. I think specifically these defense players, including Mazgaon and Cochin, because order books remain relatively strong. They've got strong revenue visibility over the next few years, and they've been executing well. So if they continue executing well with the strict timelines that they have to adhere to, both cash flows and working capital requirements will probably be on the lower side on working capital and improved cash flows. And therefore, I think the entire cycle that they'll be probably going through in terms of the earnings mix should be relatively better. Obviously, the scope in terms of shipbuilding and ship repairs differs from company to company, but I think the margins should be relatively stable and better. So I think these companies probably hold out. Within the infra space, again, I think a few companies within water treatment as a subcomponent might continue doing well. Case in point being Welspun Enterprises as an example. Strong order book that they've probably got. The tunneling company that they've probably taken over with the expectations of more infrastructure spend expected to come through. There is a 1 trillion market size in tunneling. There is a 2 trillion market size in terms of an entire water treatment scope as well. And therefore, I think very appropriately placed in terms of government capex. In the same light, I think a lot of these pipe makers might also do well. So to a certain extent, I think companies like a Jindal saw as an example, where there is expectation of 12,000 kilometers of additional pipelines expected to come through as far as the CGD network is expected to take place. More orders expected to come as far as US subsidiaries concerned and the Middle East as well. So the mix in terms of a few infra companies which are probably into water treatment, a few of these piping companies might actually in terms of earnings.
Mayuresh was telling us that even if this PLI scheme ends off, they are going to improve their margins because of the value addition, the backward integration that they are doing. EMS stocks, Dixon or any one of them, are they still something you would yarn?
So we'd wait for decline because I think quite earnestly, I think they have moved quite a tad much in terms of valuations. But yes, I think the points are well taken. The size itself for the market is expected to go threefold. So it might be a 60-80 billion market as we head into 2030. Having said that, I think the backward integration with expectations of diversified supply chains, the PLI schemes aiding and the China Plus One theme might actually work out for these players. Let's not also forget that the ODM part, which is the original design manufacturing part, that component as it starts improving on the balance sheet, the margin accretion will also start taking place over the next few quarters. So there is enough scope in terms of margin expansion, operating leverage getting played out, and earnings expanding at a decent pace. But valuations are a tad bit expensive. So I think we wait for declines on counters like an Avalon. We continue holding, Lata, as a clear disclaimer, stocks like Dixon in our portfolio, but bought at way lower levels.
Yeah. No, I agree. In spite of the fact that they're actually showing 100% growth, in terms of revenue, it is still in terms of PE quite an ask. Mayuresh, I've thrown enough stocks at you. Now you tell us what would be your top 3 picks as you move into the next year.
So each from different sectors, Lata. One is obviously from the digital space, so mobile advertising, Affle India. Our take is that the earnings which have historically gone top line at 47%, EBITDA PAT at 40% might very well continue because of the sheer converted users that they're getting onto their platform and they're coming in at a good rate. So I think the CPCU now is around 57 rupees 10 paise compared to 55 rupees 6 paise in the first half of last year. And therefore, I think as the base expands, as the mix between domestic and institutional or international remains standard or expands, earnings growth will remain quite stable. So this is one stock that we continue liking. The other one is Praj Industries. Obviously, I think a large player outside ethanol because they're diversifying into other fuels. Sustainable aviation fuel is an example, marine biofuels, and a lot more experiments in terms of the actual product has actually been conceptualized and delivered. So to a large extent, as this market evolves, there is significant amount of earnings growth that can come through. They've actually put out a target of 10,000 crores by 2030 with a significant share of exports at 50%. So I think they will be able to achieve that target, in our opinion, much earlier than 2030. So I think the earnings story continues. And the third within the banking space, Karur Vysya Bank. Our own take is the numbers which had come out in Q2, advances growth, deposits growth, very solid. NIMs have remained very, very stable. ROE expansion might actually continue because of the mix that they've got in terms of both credit underwriting as well as the credit deposit ratios, cost income ratios expected to come down, and expectations of return ratios actually improving in the next few quarters as well. So a few of these stocks that we continue liking at MarketSmith.
Mayuresh, DLF or realty sector in general?
No, so I think we continue holding stocks like a DLF Oberoi in our global portfolios. Lata. I think the cycle still has 2-3 years of headroom left. And therefore, I think the expectations in terms of pre-sales velocity expected to continue at a decent pace. Leverage has come down quite significantly. Inventory is not so much of concern for the entire industry at this juncture. And they're following an asset-light model as they foray into tier 1, tier 2 cities. So the core developers, a few quality ones we continue holding. But what we like are the EPC guys. So Capacite Infra is an actionable idea that we like at William O'Neill. Our take is strong order book in excess of 9,000 crores, giving revenue visibility over the next 2 to 3 years. They've got a perfect mix in terms of private, public. They've got a perfect mix in terms of how they're delivering these orders or executing them in terms of margin profile. The balance sheet is relatively strong. And therefore, our take is that over the next few quarters, execution will ensure that the earnings momentum continues on balance sheet, and therefore expectations of a stable return that can come through in terms of price action can be expected. So something like we like at this juncture is Capacite.
Okay. Thank you very much, Mayuresh. You really covered a wide span of stocks and sectors. Thank you very much for joining us. If we don't meet you on the last 2 trading days of 2024, here's wishing you and your entire team at William O'Neill a brilliant 2025.
Thank you so much, Lata. Wishing you the same, Lata.
Thank you.